What's up guys, welcome back to the channel. I've got another highly requested video for you today. A lot of you have been asking me what are some 5G stocks that I currently track here in 2019. So I decided to come up with 3 stocks that I think have a lot of exposure to 5G as it rolls out in the next few years. And at the end of the video, I'm also going to give you guys a few extra stocks as honorable mentions as well. But as always, please do your own research and make your own decisions. These are just some stocks that I think can potentially benefit from 5G over the long term. Doesn't mean you should go out and buy them. If you find them interesting, then you can research them further. Now, 5G is exciting many investors because it will ultimately mean much faster data speeds than what we're currently used to with 4G. And some estimates put it at being around 100 times faster than 4G in certain scenarios. And this would obviously benefit some very high growth kind of trendy buzzword kind of markets like autonomous driving, machine learning, deep learning, artificial intelligence, the Internet of Things, and of course smartphones in general. And that's a big deal because some estimates value the economic impact of 5G in the trillions of dollars. Now we could obviously pick a variety of different stocks and companies from all of these different markets, but in today's video we'll be looking at some more kind of direct pure play 5G stocks. So with that said, I hope you guys enjoy this video, and let's go ahead and start with stock number 3. Alright, with stock number 3, we're gonna go with a very obvious and very popular pick, and that is Apple, ticker symbol AAPL. Now, smartphone sales across the board are very weak right now, and Apple has definitely been feeling the impact of that as their iPhones have become more expensive over time and people are less willing to upgrade their handsets. But 5G has the potential to change all of that, because if they implement those 5G chips into their iPhones and they allow customers to gain access to very fast 5G speeds, then that could convince a lot of consumers to upgrade their smartphones and kind of lead to the next very high demand cycle for smartphones. Now, taking a look at the stock, we can see that they are up a lot in the past 5 years by almost 100%, and despite having a nice rally here in 2019, climbing by over 13%, they took a decent hit last month, dropping by over 12%. Much of the reason why has to do with the trade war between the US and China, bringing down the overall stock market, but Apple got some of the worst of it because they do a ton of business over in China. In fact, it's their second largest market by country and third largest by region, only behind the US and Europe at about 18% of all their sales, so about 1/5 of all their sales come from China. Not a good statistic considering that the Chinese economy continues to weaken, and the most recent ban on Huawei could lead to Chinese nationalists refusing to buy iPhones in support of their home country's phone maker. There's not a lot of evidence to support this yet, but investors are clearly scared of the idea. And we've already seen Apple blame some of their weaker sales on China, as they were only ranked 5th in the country by market share and still managed to lose even more in the first quarter, dropping from 9.1% to just 7% sequentially. Still, it might be short-sighted to think that Apple can't push through all of this negativity. Don't get me wrong, iPhone sales still make up the vast majority of their revenue, which by the way dropped by over 17% last quarter year over year, but their total revenue only dropped by around 5%, meaning that their other products are already picking up the slack, notably their wearables, home, and accessory segment, which jumped by 30% year over year, and more importantly, their services segment reached record sales, becoming the second biggest segment of the company and jumping by over 16%. Keep in mind that they also have over $120 billion worth of current assets, much of which is considered cash, depending on how you classify it, and they're already putting the money to good use. Not only do they pay out a growing dividend that only yields 1.8%, but has a payout ratio of just 25% with a double-digit 5-year growth rate, but they also continue to increase their share buyback program by tens of billions of dollars every single year, with last year's authorization growing by $100 billion. And they're also investing heavily on the streaming TV market, as well as a very secretive project in autonomous driving systems, both of which could be big plays on some very high growth markets. All the meanwhile, Apple continues to rake in enormous profits, with last year alone seeing about $60 billion of net income, so you essentially have a massively profitable company that is going through some short-term weakness because of smartphone sales. But once 5G rolls around, that could change everything. Now, I believe they were planning to release their 5G phone by next year, but that was when they were still kind of in agreements with Intel to provide them with their 5G modem, and then that kind of fell through and Intel isn't even working on 5G modems anymore. But Apple, and then so that was going to be pushed out even further for their iPhone, but they did recently settle a deal with Qualcomm, and now Qualcomm will be providing them with 5G modems, I believe, for the next like 6 years. So because of that, they will now apparently be releasing the next 5G iPhone next year. So that could be sometime in 2020. So in the short term, I think there's still some pain for Apple to go through. They have too much exposure to China and the whole trade war is just a mess. So the stock could possibly sink lower. But over the long term, and especially looking out into the next decade and even further than that, Apple is a company that is very hard for me to bet against. Very good balance sheet, investing heavily in future growth prospects. And I think 5G will just be another one of those, another catalyst for strong performance over the long term. And that brings us to stock number 2, which I was going to go with Qualcomm because it's a stock that I'm very interested in. It's one that I've always tracked for a long time. I've never owned it, don't own Apple either. But I decided to not go with Qualcomm in today's video because a recent court ruling left a lot of uncertainty surrounding the company, and I just can't wrap my head around how it's all going to play out. So there's just too much uncertainty. So I decided to go with a different semiconductor 5G related stock instead. And this one makes all sorts of chips and components, not just for smartphones, but also for other markets like data center, autonomous driving, and several others as well. And that company is Broadcom, ticker symbol AVGO. And some of the things that I like about Broadcom is that they're a huge play on 5G because of the markets that I just mentioned, heavily involved in all that and the 5G kind of infrastructure and components and chips and pieces that go along with it. But they also have some decent growth, they have a decent valuation, and they still pay out a very nice dividend as well. Now in the past 4 years, Broadcom has literally tripled their sales, growing from just $6.8 billion of revenue in 2015 to over $20 billion last year. But this growth hasn't been limited to just sales, as profits have also been soaring, with free cash flow jumping from just $1.8 billion in 2015 to as much as $8.5 billion last year. That's an increase of around 370%. That is a lot. And they've been using those profits to reward shareholders as they pay a dividend that still yields over 3.3% with a payout ratio of less than 50%, and they've been growing that dividend every year for almost the past decade, and according to Seeking Alpha, their 5-year growth rate is over 55%, which is pretty insane. And you'd think that with all of that growth, the stock would be trading at a much higher valuation, but despite climbing by close to 300% in the past 5 years, the company has been recently struggling because of the weak smartphone market, and as a result, the stock is down to around the midpoint of their 52-week range, dropping by over 20% last month alone, and now has a valuation of just 10 times next year's earnings with a PEG ratio of less than 1. Their price to cash flow ratio is also at some of the lowest levels that we've seen in the past 5 years. And again, this is despite the fact that they have some pretty decent growth prospects in the future. Having said that, this isn't a company without its problems. Their semiconductor segments that includes wireless sales from smartphones makes up the majority of their revenue. And because we're going through a weak period in smartphone sales, that segment dropped by as much as 12% year over year in their last quarter, mostly because Apple is one of their biggest customers. However, the company has found success in diversifying their portfolio, as that drop in sales was more than offset by their software segment growing by a massive 328%, which led to total revenues actually increasing still by about 9% year over year. That's pretty impressive. And that weakness in their semiconductor business has the potential to turn around once smartphone sales pick back up, which 5G could very well help in that regard. In fact, their CEO even mentioned that they expect their semiconductor segment to return to growth in the second half of the year, and while there is still weak demand in China, he noted that this was already factored into their guidance of $24.5 billion in revenue for the full year, which is yet another nice increase from the previous years, kind of continuing their growth trajectory or history and trajectory. Not to mention that 5G could also fuel growth in the IoT or Internet of Things market, the data center market, and the autonomous driving markets, all of which Broadcom is heavily involved in. So just like Apple, I think Broadcom is another company that is kind of struggling here in the short term because of weaker smartphone sales, and that could potentially turn around in the next couple years once 5G really starts rolling out. Having said that, I don't own Broadcom either, so neither Apple or Broadcom, but they are two stocks that I track very closely, and I will definitely be keeping my eye on both as 5G becomes more mainstream in the coming years. But speaking of my own personal investments, I may not be invested in those last two, but I am invested in this next 5G stock. And so for this next one, we're going to go on to stock number one, and that is, of course, as you guys know, AT&T, ticker symbol T. And the reason why I like AT&T, well, obviously it's a huge play on the 5G market. They are a network provider themselves, so they're heavily involved in 5G. But also I like the fact that they are trying to diversify into other areas of their business, and they also have a pretty decent valuation at this time with a very large dividend. Now, taking a look at the stock, they've had some pretty bad performance recently, still down even in the past 5 years by over 10%. And that's because they dropped by almost 30% from their highs back in 2016. The drop is mostly due to stagnation and lower growth, as their sales actually dropped in 2017 by about 2%. Although to be fair, they still brought in over $160 billion in a single year. Another concern, however, is their weak balance sheet and massive debt load, as they only have $51 billion in current assets, but $64 billion in current liabilities, and an enormous, gigantic $166 billion of long-term debt. That is very scary. I do cut them a tiny bit of slack here, however, because they generate a ton of free cash flow that has grown to over $22 billion last year, but their debt remains a very large concern nonetheless. In any case, much of that has been baked into the stock, as it only trades for less than 9 times next year's earnings, and it also leaves them with a very high dividend yield of about 6.5%. that has grown every single year for the past 35 straight years. That is a massive dividend growth history. Hopefully they don't have to cut it because of that debt. But anyway, full disclosure, I only bought this stock at significantly lower prices, so my dividend yield is well over 7% at this point, and again, I'm really hoping that they don't ever cut it. In any case, one of the biggest issues has been losing TV subscribers because of the whole cord-cutting movement, losing over 500,000 pay TV subscribers last quarter alone. However, AT&T seems to be making moves to return to higher growth in the future, as they acquired Time Warner, which includes Warner Brothers, the DC Universe, and of course HBO, all of which they will be using to launch their own streaming service later this year to compete with the likes of Netflix and Disney. They're also expecting their free cash flow to increase yet again this year, this time to a record-breaking $26 billion, which is very important if they want to continue paying that dividend. And with the rollout of 5G happening later this year and into 2020, AT&T is well positioned to attract a number of customers who will need their network and services in telecom, autonomous driving, the Internet of Things, and several other markets, making AT&T a stock worth keeping a close eye on. By the way, their fiber network is critical to their 5G deployment, and it recently broke past 12 million locations, pushing them even closer to reaching their goal of deploying nationwide 5G by the first half of next year. Alright guys, that does it for today's video. Oh wait, I promised you guys I would give you some honorable mentions. Alright, let's run through some honorable mentions. We'll do this quickly so that the video doesn't drag on forever. Let's run through them. Alright, the first one here, Verizon. It's a stock that trades at about $56 a share, and just like AT&T, they are another network provider that has already rolled out 5G in Chicago and Minneapolis and are on track to launch in 30 cities by the end of the year. They also pay a very nice dividend that yields over 4% with 12 years of growth, but just like AT&T, their balance sheet is a major concern, as they only have $33 billion in current assets, but over $140 billion in total debt. A couple other interesting 5G stocks that are involved heavily in providing equipment, infrastructure, and or services to many 5G related companies are Ericsson and Nokia. A major rival to both of them is of course China's Huawei, but pressure from the Trump administration through a ban and encouraging allies to not use Huawei's equipment in their networks has led to some businesses already shifting over to rivals like Nokia and Ericsson to assist with their 5G rollouts. In fact, just a few days ago, Japan's SoftBank switched from Huawei to both Ericsson and Nokia for 5G equipment and services, having previously used Huawei in preparation. So they pretty much were using Huawei and then they just kind of cut it off and switched over to Ericsson and Nokia. Now, Nokia also pays a very nice dividend that is always fluctuating because of currency rates, as it's a foreign company out in Finland, but it usually hovers around some pretty high rates, consistently hitting well above 3%. However, recent performance for the company hasn't been very strong and has sent the stock dropping in the past 5 years by over 32%, and they don't expect to fully start benefiting from 5G until the second half of this year, while Ericsson, on the other hand, is already seeing great results from 5G as they increased sales year over year in their last quarter by 13% reported, 7% adjusted, and went from a loss in net income to a substantial profit, with their CEO noting that 5G was the biggest impact on their positive results, and the stock has climbed by over 30% in the past year alone. I kind of like Nokia a little bit more just because of the dividend, but both seem like pretty good companies there for 5G. And finally, just to wrap everything up, I'll add that there are a couple of semiconductor companies that build chips and components for 5G smartphones and other devices and markets, and two that are somewhat popular are Skyworks Solutions and Taiwan Semiconductor. Apple is a huge customer to each of them, but I happen to like Taiwan Semiconductor a little bit more just because they're also building the 7nm chips for AMD that has recently sent AMD stock soaring. Skyworks stock has been struggling recently as they dropped by almost 25% last month alone, but things are expected to improve in the next couple of years when 5G iPhones start releasing, while Taiwan Semiconductor stock was also hit pretty hard last month, but only dropped by about half of the percentage points of Skyworks. Either way, both stocks pay out a decent dividend, but TSM's is a little higher by around 1%, TSM being Taiwan Semiconductor. Full disclosure, I have been invested in Taiwan Semiconductor for quite some time. All right, we got through those quickly. I hope you guys enjoyed the video. Thank you so much for watching. Make sure you hit the like button if you enjoyed it and you want to see more videos in the future. And if I left out any 5G stocks, please leave them down below. Not only helps me, also helps the community, and we can all learn together about some different stocks. Thank you so much for watching. I'll catch you guys in the next one. Take care. Bye-bye.